In this video, we're going to talk about why mainstream financial news may be costing you your trading profits. Coming up next. Hi everybody, my name is Burks and this is Retirement Rescue, where we talk about how to make money, save money, and live your best life. Well, today we're going to be talking about the mainstream financial news. Now, a lot of people listen to CNBC, to Fox Financial. There's all these financial programs. And as many of you know, if you've watched this channel, one of the things I don't do is listen to any of it. I turn it off. But I get asked all the time, well, why? Don't you want to be informed? Okay, let's get real here. Mainstream financial news is financial entertainment. It is not there to inform you. It is not there to tell you the truth. Just like mainstream news programs aren't there to tell you the truth. Mainstream financial news exists to get your eyeballs on their program. And let's think about how they make their money. They make their money by getting you to watch them. They make their money from sponsors and advertisers. They're not out there making all of their money trading in the market. Well, when you think about what gets people to watch news, honestly, it's anything negative. So when you turn on that financial news, 99 times out of 100, what you're going to hear every single day, the sky is falling. Oh my goodness, the market's going to go down. Oh my goodness, this is bad news. Oh my goodness, investors are just too stupid to know any better. Oh, one of my favorites. Absolutely one of my favorites. Seriously? Seriously. They're so smart on this financial program, and investors are so stupid, the market doesn't know what it's doing. Now, really? Honestly, all these financial people, all the gurus, exist to get you to watch. That's it. They don't exist to tell you really good information that can help you trade. And the problem is, if you listen to this news over and over, it starts to affect your mindset. I mean, even if you know they're not telling you what's really going on and they're not telling you the truth, it still affects you. It affects how you feel about the market. When you hear enough times in a row that the sky is falling, the market's going to crash, you start expecting it, even if it's not true. Now, the reason I refer to these people as Chicken Littles is because eventually, on one day out of 1,000, they're going to be right. But they're going to tell you for the next 6 years, every single day, how they were right that one time. That does not make them right every day. You know, you would think at some point, every investor, just like when they're watching the weatherman, and the weatherman says, oh, it's going to rain every day. At some point, wouldn't you look out the window and see if it was true? Investors should do the same thing. When there is some sort of financial news, like an unemployment report, or a durable goods report, or a real estate report, look at that data, but look at how the market reacts to that data. Don't take someone's word for if it's good news or bad news. Look at how the market actually reacts. You will learn more from watching the market and comparing that with the data than you will from listening to anybody. And here's why. The market is made up mostly of institutional large investors, what they consider to be smart money. These are people who have been in the market for decades. They know a thing or two because they've seen a thing or two. They're smart money because they have better knowledge than you have. They have better knowledge than these financial programs have, I guarantee you. So when something comes out, let's say it's unemployment news, and the numbers are largely unchanged, and mainstream financial media say, oh, the sky is falling, the sky is falling, and the market doesn't react or goes up, then you know it was complete BS. Complete BS. Watch what the market actually does. When you are investing in certain stocks, watch how those certain stocks react. Don't believe what they're telling you on some financial program. They don't know. If they had perfect knowledge, they'd make all their money in the market. They wouldn't need to be on TV. and they sure wouldn't be telling you how to do it. You know, in a lot of ways, I feel like these guys are like the fortune tellers. And they're trying to string you along with the next bad news. Oh, you have to come back tomorrow so we can tell you what other disaster is going to befall you. And the thing is, even positive news, they will frame in a negative light. So what I do is I never, and I mean never, listen to financial news, not radio, not television, any of the talking heads. I do not listen to it. What comes across my news feed is in my trading platform, and I'll glance down through it, but I don't pay attention to those headlines. I look at the actual economic data, and then I compare it to what the market is doing. That is how you teach yourself to understand the truth of the market and not be swayed by these talking heads. You know, there's an old saying, scared money is dead money. And one of the things that mainstream media, financial news exists for is to scare you. And when you become fearful of what the market might do, you tend to pull back and be much more conservative. And you cost yourself tremendous gains. You stop following your trading plan. You start being way more conservative and much more scared. You don't enter into setups that are great setups just because of fear. And it's not even realistic fear. It's not fear based on anything substantial or anything the market has told you. It is based on talking heads that just want to get advertising dollars. So think about that trade-off. If you are allowing these talking heads to make you fearful, it's costing you real dollars. Real money in your account is what it's costing you. And for what? You have the power to control what noise you do or do not listen to. I don't listen to any of it. And I'm much happier. And I think long term I'll be a much better trader because I'm allowing the market to tell me what is real and what is not. And I'm not allowing a bunch of chicken little talking heads to infiltrate my decision making. And the cool thing is that allows you to be a much more centered and calm investor because you know all that stuff you're hearing is just hype. So if you go to work and you're hearing people say, I've got to pull my retirement out and put it into a CD, the market's just all over the place, and oh my gosh, it's going to go down. You know that's because they're listening to those talking heads. It has nothing to do with truth. Has nothing to do with reality. And 6 months later, they're going to regret doing that. They're going to regret doing that. So you have to make those decisions for yourself. But eliminating that noise and allowing yourself to learn from the market instead of people who are trying to tell you about the market is definitely the way to go when you are starting out. You will learn more faster than you will ever learn listening to those talking heads. Now, if you've enjoyed this video, please click subscribe, and I'll see you next time.